Two people walk into the same bank today. One of them is $11 overdrawn. The bank charges them $35 for it. Instantly, automatically, no human involved. And if they call to complain, they'll wait on hold longer than it took to lose the money. The other one gets picked up in the lobby by a private banker, walked past the line everyone else is standing in, and taken upstairs to a room with no sign on the door, where the head of the bank is going to ask them what interest rates are going to do next year. Same building, same company, same species of customer, technically. The bank has never once in its history treated every customer the same. It runs on a hidden ladder, 8 levels, from broke to 9 figures. And most people spend their entire life standing on the bottom 2 rungs without ever finding out the other 6 exist. I found the real numbers, the actual dollar amounts where the treatment flips. And by the end of this video, you're going to know exactly which rung you're on and exactly what it costs to climb the next one. Level 1 starts from $0. Your balance reads negative $11. Not because you spent money you didn't have, because a streaming subscription renewed 2 days before payday. $11. The bank doesn't round down for you. It rounds up its fee. $35 gone for being $11 short. You're not just back to zero now. You're negative 46. This isn't a glitch in the system. This is the system. Across the country, the average overdraft fee sits at $26.77. But the big banks, the ones with your paycheck, still charge up to $35 a pop. Consumers paid $12.1 billion in overdraft and NSF fees in a single year. And here's the detail nobody puts on a billboard. Just 7% of accounts overdraft 10 or more times a year. And that small, struggling sliver generates roughly 3/4 of all that fee revenue. You call, you get a hold cue, then a script. I understand your frustration. Unfortunately, this fee is not eligible for reversal at this time. You didn't misunderstand the terms. You understood them perfectly. That's the part that stings. Some people never even get this far. About 1 in 25 U.S. households have no bank account at all. When you ask them why, the answer isn't, I don't have money. It's, I don't trust what happens to it once it's in there. A third of them will tell you, point blank, it's the fees. The bank hasn't met you yet. It's already decided what kind of customer you are. Level 2 starts from $2,000. You climbed here, not with a windfall, with restraint. 3 months of not letting the balance dip, of watching every debit like it might bite. Nobody notices, not your bank. There's still a monthly maintenance fee sitting on your statement, $12, sometimes more, quietly deducted like a toll for existing. To make it disappear, you'd need a few $1,000s parked and untouched, money you obviously don't have, or you wouldn't be reading a fee schedule this closely. You apply for a real credit card. You get offered a secured one instead, meaning you hand the bank a few $100s of your own cash as collateral, and they let you borrow against it at north of 20% interest. You're not being extended credit. You're renting access to your own money. You walk into a branch to ask about the maintenance fee. The teller is warm with the customer ahead of you, genuinely warm, laughing at something. When it's your turn, the warmth resets to a factory setting. You weren't mistreated. That's what's disorienting. You were just processed. This is the number where the math flips, where you stop being a line item the bank tolerates and start being one it wants to keep. At $150,000 in combined balances or investments, Chase will move you into Chase Private Client. Suddenly, there's a name attached to your account. a dedicated banker, and a JPMorgan advisor on top of that. No ATM fees anywhere in the world, no wire fees. Your mortgage rate quietly drops 0.125% off once you cross $500,000 in combined deposits, a full quarter point off past $1 million. Nobody mailed you an application. Nobody made you fill out a form justifying your existence. The bank pulled your balance, ran the number against a threshold, and reassigned you. Here's the part worth sitting with. The bank is now telling you the fee-free relationship you finally earned is getting more expensive to maintain. Starting in 2026, if your balance dips under $750,000, private client members get hit with a real fee, substantially higher than what regular customers pay for a normal account. The finish line doesn't stay still. It moves every time you get close to it. 7 figures, and something else changes. The bank stops treating your money like a transaction and starts treating it like a relationship worth protecting. Cross into Citigold Private Client, a combined average monthly balance of $1 million, and you get a wealth team, not a teller. No fees on wires in or out anywhere. Unlimited ATM fee reimbursement globally. No foreign exchange fees. There are private lounges in cities like New York, London, Hong Kong, not for flights, just for you to sit and have coffee with a city advisor between meetings. Fall below $800,000 for 3 straight months, and Citi quietly re-tiers you back down. No confrontation, just a downgrade notice on a statement. The relationship was never really about you. It was about the number attached to your name. This is where the term private bank stops being marketing and starts being literal, a separate institution operating inside the institution with its own door. Bank of America's actual private bank opens at $3 million in investable assets. Goldman Sachs wants $10 million. JPMorgan's private bank, also $10 million. At this level, you're not assigned an advisor. You're assigned a team. Someone for investments, someone for estate planning, someone who exists solely to coordinate the other two. The products change too. You're not choosing from a rate sheet anymore. Loan terms get negotiated in a phone call. A senior banker will tell you, without irony, that the paperwork usually takes 2 weeks. Then have yours done in 2 days because someone above them made a call. You haven't done anything different with your money. You've just crossed a line on a spreadsheet somewhere in a bank's client segmentation software, and the entire experience on the other side of that line was built years in advance for someone exactly like you. Citi draws its hardest line here. Not $25 million in assets alone, but $25 million in assets on top of an already required $10 million with them specifically. Below that combined bar, you don't get in the room. Inside that room, direct lines into Citi's investment banking arm. If a company you're invested in goes public, you're not reading about the IPO in the news. You're inside the allocation conversation before the public ever hears the ticker. Securities-based lending against your portfolio, structured however your tax situation requires, multi-generational trust,